Hi, welcome everyone to this session on the India market review. We are back after a sort of longish break. This is the 19th May 2017, Friday at the end of market hours. So we are looking at everything that has happened in the last few weeks and looking at what is likely to happen going forward. What we're also going to focus on in today's session is looking at both the short and the long-term trends of some of the key well-positioned Nifty stocks. And what I mean by that is we'll look at, not only daily charts but also weekly and maybe even monthly to give a sense of where the market may or may not be heading, and look at both short-term trading opportunities and long-term investment opportunities. So before jumping in, just a very quick recap of the many things that are happening in the world. So everybody is probably well aware of all the chaos that's going on in the US with respect to Trump, the Comey firing, then Comey's note that he was perhaps asked to or suggested to let Flynn go. He's denied the special counsel into the possible Trump-Russia link, and then we have him going for his first foreign visit to Saudi Arabia and then to Israel and a few other Middle Eastern countries starting today, Friday, US time. So that's in the US, and the media has been quite consumed by it. The market also apparently reacted downwards a couple of days back, and the impeachment word is being used more and more, though quite frankly, as serious political commentators say, his impeachment is, by any standard, is quite a distance away, nowhere close. Coming to India, we have the GST, which has more or less fallen in place. There has been total agreement on a number of essential items. A lot of the items are going to be between the 12 and 18% tax rate. Some of those tax rates got notified today, right? And what we also have, therefore, is a lot of clarity on what is going to be on what tax. So all right, cars are going to be at 28%, so some more news has come out. And then we've got uh, some hotels to be charged between 12 and 18%, casinos and movies at 28%. And there's, of course, the full list of GST rates for 98 categories of goods. FMCG stocks did a pretty good move today, at least in the morning on 19th of May, and then of course it cooled off. And 1st of July is when the GST is likely to be out. So we are looking at a lot more clarity. And also the big question in India, monsoon looks like very much on track, right? So there is something about where is that SkyMet? Yeah, a lot of things about it already coming to the Andamans of 2-3 days ahead. And oh, 1 second, there is Q. Yeah, so there is a lot of talk about the weather being pretty much on time. Sorry, what am I saying? The monsoon being very much on time in India. So Bangalore, of course, we've been having some very nice rains in the last 2-3 days. So overall, things seem to be, quite good in the sense that there is nothing particularly uncertain which is out there. A lot of good results out, mixed results in terms of the quarterly results, the annual results which have been coming out steadily in the last many weeks. Nothing of a great surprise there. And then there's of course the India uh, story and the IT thing. There is more and more not so good news, but things may be settling down for now. But of course, it'll, I think, come back with a vengeance. It's a trend of automation, of protectionism globally that is just going to grow. Interestingly, there is a very good article on BBC right now. You could want to maybe look at it, and it says why automation could be a threat to India's growth. They haven't really put anything new here. I read this article. They have collected data from various other media outlets and centers and put it into a nice longish article. So it could be something that you want to look at and also get a sense of maybe where trends are heading on the automation side and which industries are going to benefit and which industries are going to definitely get negatively impacted by this. Coming to this point, big challenge for the government, for the nation, for the demography as to what the future for employment may or may not be. It throws up a lot of questions which are right now completely unanswered, and we'll just have to see how it pans out. So broadly, these are the issues to think about. There will be somewhere down the road very quickly, we're going to do probably in the next 1 or 2 weeks, detailed in-depth FA review, fundamental analysis review of the Indian stock market, and go into a very detailed analysis of the sectors, maybe even individual companies. So you may want to watch out for that. Last time we did that, some of the sectors we identified went up 100 to 300% in a matter of 6 months to 9 months. So maybe we'll find something like that again. Who knows, right? Maybe long, maybe short. So we hope to see you when we have that session. All right. So let's jump into the analysis of the Indian market, and of course we'll also be looking at some of the global indices as part of our regular global wrap up. So what you see is the Nifty index on your screen. That's continuing to power itself to fresh highs. There really seems to be no uh, what do you say, letting go of it. Some reason or the other, some positive news or the other, some good results or the other, some foreign money coming or the other, which is fueling this market steadily up. In the review we had done about a month back, I had mentioned that perhaps we have a top in place. That was at around this time. Obviously proven wrong. It very nicely gapped up to that, and we actually went up through that, and we have a gap here there which has not been closed. But in the last 2-3 days, again showing a little bit of weakness, but overall you look at the long-term moving averages, they're all strongly up. So till being a little, say, chastened now, have to say that there's not have to. It's obvious that the trend is still very much up. This is the trend line to watch and to see if it gets broken. And even if it gets broken, this would be a multi-month trend which gets broken, not the say, quarter or a multi-year trend where we have been steadily going up from 6,800 levels to 9,600 levels. Having said that, just one point you may like to note is we've got this fantastic up move from 8,000 to 9,600 in the last 4 or 5 months. Impressive by any standard, but it does not yet have any secondary correction. So if you look at the various legs of this move, if this is part of a primary uptrend, this is a good secondary correction, then the next leg of the primary uptrend has started. We do not have any secondary correction that has happened as of now. So that's just a matter of time. It'll definitely happen. When and how, of course, that we'll just have to wait and watch. For now, very much looking both on daily and on this, you're seeing the weekly charts, that the trend is quite strongly up, right? On the weekly chart, however, please notice that we now have shooting star which is there on the weekly chart, right? So that's something to keep in mind, whether that will uh, get confirmed and cause a reversal or not. A little too early to say, but there's a shooting star there to be watchful of. Last time we had a shooting star here, and there was one more here. Please note that we went down quite a bit, right? So two shooting stars there, which are sort of part of a double top, and we now have another shooting star. Wouldn't say it is in the sense of proportion that big, but nevertheless a weekly shooting star. So something definitely to watch out for. In retrospect, we may be looking at a temporary high that has been made here. Otherwise, it's just something that is a pause and it could go up. So next week, perhaps a little decisive week, a little critical week, in the sense of whether the trend would change or not. Looking at the indicators, nothing in the indicators to suggest any weakness at this point. On the weekly chart, a lot of strength as a matter of fact, and on the daily chart, there is now some of us who know about divergences, etc., might talk about a potential divergence here, but in a strong uptrend, I hope you remember that we ignore uh, bearish divergences. They are just part of the correction, as we all know. Right, so nothing significant right now, just to wait and watch and to follow the trend as it is. I think next Monday, Tuesday could be a critical point if this trend line breaks down, doesn't break down, and we'll have to wait and watch. If it keeps going up, well, obviously in terms of, let's say, just round off numbers, 9,600, 9,700, etc., will be levels, temporary pauses, but definitely the big one will probably be 10,000, and that is definitely something to keep a eye out for. Does the market reach 10,000? And that will be, I'm sure, a big celebration for the Indian markets if we are able to do that. So approximately another 10% move, almost 8% move will take it to 10,000. Could happen, you never know, though it will be quite a substantial move, no doubt, right? Okay, now let's have a look at how the global markets are doing, and we'll come back to the Indian markets and see whether the Indian market, how it is synced or not synced with the global trends. So let's have a look at that. All right, so what we have on our screen right now is the S&P 500 from the US. As you can see, so the S&P 500 from the US, we have clearly a sort of double top in place at around 2,400 levels, no doubt about that. And what's happened is this big gap down and move down on the US markets. This was when the talk about Trump potentially giving out secrets to Russia came out. Bit of a recovery after that, but really it's going to definitely be take an effort on uh, the chart to actually break out of 2,400. So at least for the short term, it appears that the US market has, the S&P 500 has set uh, top here, right? And if this trend line breaks, then we'll have more downside to look forward to. Uh, The Dow Jones probably should be similar, exactly in a similar situation as you can see. Uh, more or less copycat, so really nothing much more to say. You can also see this bearish divergence which is happening clearly on the uh, MACD. Right, so that's also something to keep a tab on. Right, so quite possible that the Dow Jones could correct to maybe 20,000, 20,200 levels. So the US markets seem to have a top in place. Looking at Germany, well, so this is definitely right. Yeah, made a new life high, and things going on quite strongly there. But I guess it just reacted to the rest of the world, and we've got a temporary downturn there in Germany, probably coming down to 12,400, 12,300, and then we'll have to review what happens there. But the uptrend for now, at least temporarily, is halted in Germany. CAC France, so we had this election in France, and pro-Europe Macron has decisively won, and Le Pen decisively lost. That would probably be a big relief to the whole European setup, the Eurozone, etc. Macron, the current new president of France, very strongly pro-Euro, and the CAC has continued to rise. Still the big laggard of the major economies in Europe. Uh, Again has come down, at least on account of just the global factors and Trump, I would suppose. Looking at Nikkei, so Nikkei also showing a pretty similar picture to US. Almost it's like a copycat in a sense. Uh, so really nothing much more to add. Big gap down on the Nikkei. So one thing is very clear, that there is really nothing on the global stage which is strongly bullish. As a matter of fact, all the global indices. Oh, we forgot to look at the FTSE. All right. So looking at the FTSE, so made a new life high. Amazing that the British stock market just rallies and rallies and rallies. There's Brexit and things are not looking too good around the Brexit situation. Some amount of bad blood between the UK and the Eurozone on how it's going to pan out, but we have clearly uh, evening star here on the US on the FTSE, uh, uh, and like I said, really nothing which is really bullish about any of the global indices. So no support that is there from the global markets in terms of India's markets perhaps going up. We'll just have to wait and watch. So looks like the tide might have turned, at least for the short term, and we should expect more of a down move rather than an up move, which brings us back to the Nifty. So very clearly I would be a little hesitant to be strongly long on this and on the Nifty, and if it breaks 9400 on Monday or Tuesday next week, then maybe we're looking at much lower levels. Even the 50-day moving average is at 9200. That's a clear 230, 240 point fall from where the market is right now. That's not going to be anything small by any measure. So none of the long-term moving averages have been tested. The last time was about Jan, If you just come back to this period here, this was June and we went on till about November. So that's July, August, September, October, November, about 5 months or 3-4 months before it came down. And we've, definitely gone a much longer than that, 4-5 months without really, looking at a correction or a retracement. So little circumspect about how long this uptrend could continue, given especially how the global markets also are. I can't think of any particularly strong bullish factors or good news that's going to come out. The one thing definitely is the monsoon, and looks like it's very much on track, and by all the news that we have seen, and that could give definitely a boost to the markets for maybe a couple of or a few more 100 points on the Nifty. But given the global factors, one would really wish to wait and watch, or be very careful about your longs. On top of that, I think at least out of the US, event risk on the political side is heightened, and overnight anything could just really happen. So that's another thing to keep in mind. Okay, so for now, I would say 9,530, 9,600. Uh, as long as the trend is there, yes. But as soon as this trend line breaks, then one should consider getting out of longs. And for active traders, maybe a short all the way to 9,200, maybe even 9,000 is in order sooner than later. Right? Okay. So that's the Nifty view. Let's now look at our sector indices, and we'll try and drill down into which sectors are doing well. All right, so Nifty Junior, also called the Next 50 now. So this is our mid-cap index, basically. Not the best companies, not the large cap companies, but those which have the potential of perhaps getting there soon enough. And what's interesting in that is that the mid caps were outperforming the market for quite a bit of time in the last many weeks. But if you look at the Nifty today versus the Nifty Junior or the Next 50, the mid cap space definitely seems to have taken a bit of a hit. And if I look at this trend line, which is the better fit or the best fit trend line that I can put, then that's clearly been broken. We also have a gap down on the Monday. So one more index which is clearly seems to have put in a top, I would think, and it's important to keep this in mind. The broad market, the CNX 500, not looking as bad as the Next 50, but nevertheless that also has turned down, but the trend line has not yet broken. So that's something which is good. Right, the trend line has not yet broken. All right. Now coming to the sectoral indices, the Bank Nifty making new life highs, amazing move by the banking stocks. There's been a lot of talk about the NPAs, and there's more and more sort of mixed news on that, I would say. Uh, some news reports about NPAs having doubled quite substantially from last year. And then today there is some speculation, okay, it's not a banking thing, about Kirti Chidambaram, the son of former Finance Minister of India, having gone to London, apparently on a routine trip, but then there are questions being raised as to why he went just 2 days after the CBI inquiry, so I don't know whether something else is unraveling there. Well, even if it does, I really doubt it's going to affect the market much. These are long-term trend lines that I'm just extending so that it's there for reference. Right. And right now, the Bank Nifty still green. Okay, so that's good news. But you can also see that for the last 5-6 days or more, it's just been stuck at 2300. So is 2300 um, um, at least a short-term resistance. Do we see this coming back to at least 22,500, maybe even 22,000? We'll have to wait and watch, right? So this is what the bank Nifty is doing. So a short-term resistance is definitely in place. Otherwise, really nothing to write home about. The banking stocks not looking as weak as the broader market. All right, so let's bring this to the rest of the sectors. We'll just let's look at PSU banks. The PSU bank index, which is the PSU banks are the ones which are carrying most of the NPAs, and if something happens to resolve that, restructure that, they could go much higher. One point to note about the PSU bank index is that it has clearly been able to go above this very strong resistance zone of about 4 years, 5 years, right, between 3,300 and 3,450. It has decisively moved above that, no doubts about that. Could even be doing a sort of flag formation at this point, right? Flag formation there, and we'll have to wait and watch as to how that pans out. What's there right now is uh, an uptrend, and at least as the PSU banks are concerned, I think it's definitely something to be long at, not looking at shorting it by any means. So this is potential flag. So perhaps even 3.5 to 3.8, about a 300-point move. That's almost 10%. Right? That's quite good. 10% on PSU banks, definitely, and then we can maybe even look at 4,200, 4,400 on this, which would easily be about a 30% move, a 1,000-point move, 25 to 30% move on this. Let it take the rest of the year. That will definitely be an impressive thing. There's no doubt that something has to be done on the NPA thing. They're talking about a bad bank being set up to move out all the bad NPAs. There'll be recapitalization that will be required. I am guessing that after the GST thing falls into place, Mr. Jaitley, the finance minister of India, his next focus would probably be on the PSU bank problem, the NPA problem, and I mean, I'm sure they're already working on it, and something should come out. So there are two things. One is the trend itself, and very likely, some good news coming out on that front. So on PSU banks, should probably stay long. Okay. So let's now get into the other major indices. We're looking at the, let's say, CNX IT. So impressive recovery on IT. Now the moot point to note, as you can see on IT, is it's come to exactly where the downtrend line is. I did that yesterday and then has retraced from that. Now what's interesting, and this will definitely be interesting times ahead for IT, is that we have an uptrend also. So we have a short-term uptrend. We've got higher tops and higher bottoms, and we have a longer-term 2-year downtrend. Is the worst for IT over? After all, it has come down from about 13,000 to 9,500. Does not mean it can't go lower. Is the worst for IT over, or are we going to see this longer-term uptrend, you know, uh, force the IT stocks back down? So be interesting to watch what happens. The longer term moving averages seem to have sort of stabilized. They're going sideways. I would just want to wait and watch, not taking sides at all on what IT could do. What is critical is if IT has to go up, then this index has to break 10,800 on decisively good volumes. Otherwise, the longer term trend is definitely down. Right, so good place to perhaps look at potential shorts. Good stop loss at about 10,785, and if it breaks here below 10,400, could easily go to 10,100, 10,150. Right, so that is CNX IT, and then looking at the other stocks, the other indices, really nothing related to IT. I'm just thinking. All right, so let's just look at pharma. So that's the other one which was really doing badly. That has really not recovered. As you can see, it is clearly in a 2-year downtrend, just like IT was. No sign of strong recovery like you saw in IT, though there is a double triple bottom here at 10,000 levels, psychological, but clearly the longer term trend is down, the moving average is pointing down, the short term trend is down. It's going to be a tough call for, I think, pharma to move up. Best to wait and watch as to how it behaves around 10,000. May move up, may not move up, but clearly I think the longer term, and we're looking at weekly chart here on pharma, that's quite bearish, no doubt about that, and that is the line you want to watch. If it breaks 10,000, then very likely that we are going much at least somewhat lower, maybe to 9,000, another 10-12% down on the pharma index. So pharma quite bearish, subject to it breaking that 10,000 mark. It could also be, on the other hand, a nice triple bottom or a 2-3 year support that it has taken, and could it recover from there? From all things put together, the news, the FDA issues, etc., looks like at least for some time now, the the growth prospects are definitely a little dull. Okay, recovery prospects, right? Just go back to IT. Did not see it on the weekly chart. Looking at it on the weekly chart now, and right, looking a little promising, except that this week we clearly have a shooting star, so we'll have to see how that pans out. Right. Okay, so that's IT and pharma. Coming to realty, right? So realty, really big, massive moves that have been happening on realty. We've been talking about it. So whether it's the BSE realty or CNX realty, all very much the same. We've been talking about strong recovery in realty for months now, and it's definitely gone as per expectation. Seems to be a small pause at this point, but I don't think anything really too worrisome to right now. Might correct about 25 to 250 on the CNX reality index, maybe even to 240 at some point, but it's done an impressive move from almost 150 to 250 on the entire sector this year. Uh, yeah, and in a sort of 3-4 year time frame, you can see that it still basically stayed sideways, some way to go before it breaks out, and it could very much do that. All right. Okay. So that is reality, and then we look at auto. All right. So the auto index went back to its life high clearly this week, and then has clearly corrected back. So made a new life high, but not by very much. So we'll just watch out for that. Uh, Big red candles. We'll have to. So one of the things about auto was where would the, of course, for actually all things, where would the GST uh, be? And overall, it has come at what is expected at the highest tax rate of 28% is where the GST rates are on cars. Actually, as a matter of fact, they also have a cess on cars, so I'm not sure whether cars are getting cheaper or more expensive. No clue about that. So as of now, this is looking a little dicey on the upside. But having said that, the trend is the longer term trend is definitely up. So maybe a correction to about 22,500 is a place where one could consider buying it, or just wait and watch. Right? Okay. Nothing decisive. Okay. Capital goods. So uh, this is one of the sectors which from 2008 has not yet recovered, right? But showing some signs of long-term recovery, uh, definitely having a decent uptrend, but in the last two days, really that trend seems to have broken down. The strength of that, the rate of this up move has clearly come down quite significantly, and even if I put a conservative trend line there, the outermost that I can find, then really nothing uh, that is there to really suggest uh, that the uptrend may not. The indicators are also weak. So again, this is definitely showing out a toppish pattern. As a matter of fact, it has broken a short-term support there. So we are looking at one more index. So IT and pharma already. Pharma definitely weak. IT trying to recover, but get broken down by the longer-term downtrend. And the capital goods index has broken one, let's say, multi-week support. And if it keeps going down, then that's another sector which is really not going to do too well. FMCG. So this was one big news today's, because there's a big relief for a lot of FMCG companies, in the sense that a lot of the products that they make were put in the 12 to 18% tax bracket. There was wondering whether FMCG products would get more expensive or cheap. So there's relief on that front. And what we have is, well, FMCG index going to quite a high level, but then, losing out a lot on that opening strength. And what we also have is definitely a bearish engulf, uh, a bearish divergence which is there in FMCG, which has now been there for about 4 months. Uh, at some point, these divergences, remember, will play out, and this is on the weekly chart. So even on the weekly chart, we just take this up there by okay, not really having a divergence on the weekly, I would say, or it's okay, we're speculating too much. Let's leave it. So what is there on the weekly chart, however, is you can see this candles with longer upper shadows. Not a very healthy sign for a uptrend. So something to keep in mind that correction could happen. But FMCG, one of the things is the monsoons. You don't want to forget that. So as of now, FMCG looking good. Let's just leave it at that. We'll put a trend line, and that's what we want to keep tracking as and see what happens to this. So it's like a uptrend channel now, obviously, uh, and whether the channel holds, whether it breaks. So one could argue that it's a good place to buy. One could also argue that it's a good place to just be cautious and wait, watch for a breakout or a breakdown. So it's an iffy situation, and in an iffy situation, the best thing is to just wait and let the market clarify its own position. Coming to metals, well, so that's definitely something that has topped out. We spoke about this head and shoulder top in metals, and that has clearly broken. As a matter of fact, not only has it broken, it's come back to its neckline and seems to want to go down now, is what I would think. There is definitely support on the indicators right now, and it's come close to the 200-day moving average, but the longer term, the 50 and the 100-day have moved down. And then we've also got a potential downtrend that is forming. A break below 10,700, 10,750 definitely will make this go down a lot more, right? Okay. All right. Okay, so let's wait and watch for that. Could even come down to 10,800, maybe even 10,500. But metals definitely looking like a good thing to short. If they do manage to go back up around 11,000, 11,400, this index could be shorted with a stop loss around 11,500, 11,550, with a target of about 10,800, then 10,600, and then perhaps even much lower to 10,000 in the months to come. I just have to see how the whole thing pans out. Weekly chart, okay, that is not showing too much weakness. It's actually maybe showing some strength. It has recaptured the multi-year resistance, which has now become a support. And oops, weekly, yeah. And does it take support here, and then does it go up? That's the question. Maybe it goes back to about 12,000 and then keeps rising. Not sure about it at all. All right, so I would say a mixed picture, uh, and I'm more inclined to think that this will probably go down. And keep one more thing in mind as far as the pattern is concerned, just to invite your attention. Oops, what happened here? It's not supposed to have volume. One sec. Oops. All right, so I had to reset some chart. So as I was saying, in the weekly chart of BSE metals, what's interesting is this recapture of this multi-year resistance, which is now a support. So in the longer term, are we really headed up? But in the daily chart, what you can clearly see is a developing downtrend, a breakdown of a head and shoulder top, and more likely that it's going to go down rather than go up, right? Okay. All right. So again, a sort of iffy proposition on the metal side. I would be more inclined to think that this is perhaps going to go down. All right. Looking at the power index, well, this is also quite bearish now. It has come back to the 50-day moving average. Uh, Something like the metal index, it had this support level, which it has clearly broken down from. And one of the things that we can also see in the uh, indicators is this bearish divergence. So went there, and then that has, oops, that has panned out this way. So we've got this bearish divergence there, and clearly seems to be panning out. Let's look at if the BSE metal had, oh yeah, the metal clearly had a very strong fall in the indicators, suggesting some weakness. And in a sense, that's also there as far as the weekly chart is also concerned, but become a little tricky to interpret. So I've spoken a lot this time on the indicator stuff, but don't want to make this an indicators class, but I do hope that there are times when you pay attention to indicators and there are times when you do not pay attention to indicators, and it's important to know when and when not to, and to distinguish between the same, right? So in the short term, indicators clearly weak. In the long term, little iffy. We'll need to let this trend develop so that we've got more clarity going forward. All right. So that's the metal index. Anything that I've not seen? Auto, yes. So that covers it. CNX Infra is basically almost a mix of many charts, many sectors rather. And well, in this also, what we can see is this and that, right? So for about 4 months, this divergence is going on, and so we're seeing this in more and more sectors. I think that's the moral of the story for this part of the IMR. We are seeing this in many sectors, and we've got to really keep this in mind. Looks like overall in the longer term, as in the next few days and weeks, the market is looking to, in a sense, top out and looking to set itself up, at least if nothing else, for a correction. I'm just going to keep this trend line here. I know it's not touching, but just as if this one breaks, then next is probably the 50-day moving average, and then probably much lower after that. So looking at many of the sectors and looking at many of the sectors showing bearish divergences, and further looking at them uh, not really how shall I say, uh, showing a lot of strength. One would need to be a little careful, a little circumspect about being strongly long in this market. I do think that maybe a correction is building, though the price evidence for that is really not there. Basically saying that on the basis of indicators. So really not a single sector that I can think of except maybe IT, which is showing some strength. FMCG also showing some strength in terms of how it went up, making new life highs, but little concern with that shooting star. Or reality definitely showing some strength, but looking also at potentially topping out. So these are some of the issues which are there across the sector. Um, and that's why a bit of a concern as to how long this up move is really going to be sustainable and whether it can keep continuing. So looks like maybe iffy thing. Uh, all traders should trade with strict stop losses now on the long side. I would generally, when things are iffy, when things are uncertain, if you have to have a trade, it's better to be on the short side than to be on the long side, right? Having said that, overall, the Nifty itself, NSE 50 is in an uptrend, so there's no clear downtrend at all at this point, but as it goes up, that evidence for it will appear. And yeah, that's it. Really nothing much more to say. I would go light on long positions, and I would start looking to see if shorts can be built up given the overall state of the market. So that brings us to the end of the first part of the IMR for 19th of May. Um, so the answer to this is clearly the uptrend is top heavy, a lot of bearish divergences, and perhaps shorting opportunities are coming up in the next couple of weeks. The reason I'm hesitating so much is the monsoons, which could just, and the GST finally falling into place, which could just give a kicker to the markets, and it continues to rally for at least maybe a couple of 100 points, maybe a few 100 points on the Nifty. So with that, coming to the end of this, really no clear-cut direction on the market, so trade cautiously. I'm sure in the next part 2, when we do next in the Nifty stocks, we will see both long and short opportunities given what we've seen in the major sectors, and then one could pinpoint on those, and you'll get better quality setups either on the long or on the short side. And the major indices itself, no great setups as of now, right? Great. So with that, coming to the end of this session, thank you very much. Keep in touch and look forward to you being with us in part 2.